Hey guys, Tony DeNaro here. Welcome back to the channel. Is the Fed losing control of the economy? What happened with the CPI data last week and the market crash? What is going to happen tomorrow with that Fed interest rate hike? Is Jerome Powell going to meet the market expectations or be more aggressive? And more importantly, what is that going to mean for Wall Street and your portfolio? Let's get right into it.
So you wanna go to war?
All right, guys, you already know from Friday, June 10th, that CPI data came in hot at 8.6, hot across all fronts, blowing away people's expectations, not in a good way, and the market reacted accordingly. And this week, everything has been all about waiting for the Fed meeting, which is today and tomorrow, June 14th and 15th. Yes, there's just not going to be that much going on in June until we get these two big things out of the way, the CPI data and the update from the Fed. After these two things are out of the way, what else am I looking at on the economic calendar? We've got another Fed meeting at the end of July, and we also will be reviewing the GDP data for the United States for Q1 and Q2, with Q2 ending at the end of June, and that is when we will know if we are technically, by definition, in a recession or not. I think we all have our own viewpoints about whether or not we are. We will know for sure, and the headlines will blare it if we are really in a recession once we get the Q2 GDP numbers in the books at the end of June. When I saw those CPI numbers come in so high, I did buy some protective puts on the SPY to hedge my portfolio from further downside risk. If you've been a longtime viewer of my channel, you know I've kind of been on the fence here recently about taking a strong direction on index calls and puts because the market is so bipolar. But I finally capitulated and bought some puts on the SPY, and I guess we'll find out tomorrow when Jerome Powell speaks whether or not that was a good play or not. My general sense at this point is more than 50% on the side of further declines coming in the market between now and the end of the year, further declines from where we're at today. Now, there is a small chance that I might revise my outlook on what the market is going to do after I hear Jerome Powell speak tomorrow and what he plans to say on interest rates. So let's talk about those interest rates right now, how the market is going to react to them, and more importantly, how they might impact you. Over the previous months, the Fed has communicated that they plan to do a series of half-point rate hikes throughout the remainder of this year. However, the Fed does always reserve the right to change their plan if economic indicators show that more strong action is required to get a hold of inflation. We can see from the headline here on Bloomberg, big money in the stock market is in a mad dash to get out of the Fed's way. Quant traders cut equity exposures towards the lowest of a decade. Hedge funds in large two-day selling spree with shorts climbing. That is what happens on Wall Street when you have high CPI numbers and then people start expecting the Fed is going to make a bigger move than previously announced. Big money is going to get out of the way and you're going to see everything go down. You're going to see bond rates go up. You're going to see equities and crypto go down. I will put a link to this article in the video description. It is important that you read this and understand what is going on if you haven't been paying attention. It is my belief that Jerome Powell and the Fed will raise rates more than half a point tomorrow. In fact, I hope that they do. And aggressive action is needed now to get control of it so that we don't languish the rest of this year with 8.5% to 9% CPI numbers. Now, yes, there will be some short-term pain in the markets if the Fed raises rates tomorrow. So my expectation is we'll get 0.75 or a full 100 basis points move tomorrow, and that the market will react negatively. And then going into next week, we can start thinking about what's next. But despite all that short-term pain, this is necessary medicine to get the economy back in control and to tame that inflation. And I do sincerely hope that Jerome Powell takes aggressive action with interest rates on June 15th. And we'll find out midday tomorrow when he goes live in front of the press what their plan is. I am Tony DeNaro. I want to thank you for watching this brief economic update. Don't forget to buy and hold that subscribe button, and I will see you on the next video.